All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely check out the website at cubicleinvesting.com. And if you're interested, we do have a online options trading community. It's called Flip That Option. So the link is in the bio if you're looking to trade with like-minded individuals, which I found is much more, it's very beneficial to trade amongst a community versus trading by yourself, because trading can be very isolating. Nonetheless, today is Thursday. It's May the 29th, approximately 10:24 a.m. Eastern Standard Time. And as usual, I am in a trade. So as you can see here, I primarily trade the zero DTE expiration trades, right? So today is May 29th, and the expiration that I'm trading is May the 29th, right? So I sold this short strike here at $59.95 for 4 contracts, and I bought the strike price of $6,005 for 4 contracts as well, right? So that defines my risk. So this trade, I got 100. Let me just do this here. So I got $160 for this particular trade. And I actually sent this trade out to my community at Flip That Option so they can be aware of what I'm doing in terms of the SPX 0 DTE. So I got $160 for this particular trade. And so the question becomes, well, Erica, why did you go on the call side, right, versus the put side? Well, so overnight we had the news come out that the courts have actually blocked Donald Trump's worldwide tariffs, right? At least temporarily. I'm sure he will appeal it. And as a result, the overnight market, the futures market actually rallied, and as a result, it caused the cash market or the stock market, once it opened at 9:30 a.m. Eastern Standard Time, it caused it to rally as well. However, I sort of figured, based upon looking at, I'll just bring that up here, based upon looking under the hood at the market internals. So the market internals are sort of analogous to looking under the hood of a car to see what's going on, right? So the market internals gives you the inside perspective as to what's going on in terms of the New York Stock Exchange. And what's going on with the New York Stock Exchange will impact, influence, and affect what's going on with the S&P 500 or the SPX, which is the index of the S&P 500. So we're looking at today's price action for the advanced declining indicator, which is one of the market internals, right, that I look at. And we also look at the volume, right? So we look at the volume here for today, May 29th. And you can see that the volume is very low. It's very steady. It's not increasing like we saw on Tuesday, right? So Tuesday was a major up day, a major rally for the SPX. And as we can see right out the gate, the volume on the New York Stock Exchange, which is conveyed by the $VOLD, right? That's the other market internal that I keep track of. And so as you can see here, the volume is just really strong, or was really strong on Tuesday, conveying that market participants were really investing heavily on Tuesday, right? Causing the volume to increase, which also caused the ADD to actually, when the market opened at that 2,000 level, meaning that there were more stocks advancing or increasing in value versus decreasing in value. So that's what your advanced declining indicator conveys. It looks at the number of stocks that are advancing minus the number of stocks that are declining. And so when you have the ADD in that 2,000 zone, then that conveys a major update, right? And so if we look at the ADD for today, we can see that it's not in that 2000 range, right? It's actually below 1000 right now. So meaning that there are a lot of stocks that trade on the New York Stock Exchange that are declining versus actually advancing in value. So hopefully that makes sense, right? Because what takes place on the New York Stock Exchange impacts how the SPX moves, right? And so because the volume is really low today and the ADD number is well below that 2000 level. That 2000 level is a very bullish level. So it's not bearish today, but it's not extremely bullish either, right? So it's somewhat neutral. And so as a result, I decided that it would behoove me to go on the call side because the value of the SPX is going to be suppressed by what's taking place in the market internals, right? And the market internals, again, look at what's taking place on the New York Stock Exchange or the NYC. Also, I look at the 11 sectors that make up the S&P 500, right? So you got the technology sector, healthcare, consumer staples, consumer discretionary, you got materials, you got communications, you got industrials, you got financials, you got energy, and you got utilities, right? Now, the sector that really heavily impacts how the SPX moves or really influences how the SPX move is the XLK sector, right? So the XLK sector is the technology sector. And so we can see here that right today, it's up, it's in the green, but it's not significantly in the green. So again, it's just, it's conveying that, yeah, the market is up, right? The market is up 23 points, but it's not extremely bullish, right? So if we go inside of the XLK, we can see that all of the big dogs, NVIDIA is up over 4%. Apple is, it's up, but it's not up significantly. Microsoft is up, but not significantly. Broadcom is barely up. And so, yeah, although the market is up, its ability to rise even further than what it has risen already, it's going to be suppressed by what we just saw on the market internals, right? So the volume is very weak on the NYC, and also the number of stocks that are advancing versus declining, that ratio isn't that significant. And so as a result, yeah, I feel comfortable going on the call side and, and pretty much, having 100% confidence that I'll be able to ride this trade out until 4:00 p.m. Eastern Standard Time today and walk away with $160. Now, I may decide later on to go on the put side, right? So here, your puts are on the right side, the calls are on the left, and the strike prices are down the middle. So I might decide to go on the call on the put side later on to maybe take in some more credit, because what I like to do is I like to get between $300 to $500 per day. Sometimes I like to get between $5,000 and $1,000 per day on the SPX, but it just depends on what the market is offering on any given trading session, right? So yeah, but I may, I'm a very conservative trader. So I may just, stick with my $160 on the call side and be content with that. So I will come back and give you guys an update, maybe, a few hours from now, so that you can see how the trade is progressing. Alrighty, so I'm back to give you guys an update. So it's approximately 12:58 p.m. Eastern Standard Time. So as you can see, the SPX has actually dropped a bit more down in value versus the previous video segment, and so it's about 85 points away from where my short strike is on the put side, right? So my short, I'm sorry, put side, the call side. So I'm on the call side. I'm on the call side, right? So my short strike is at 59.95. So that's the one I sold, and the one I bought is at 60.05 or 60.05. And so you can see, so we can look at the XLK. So the XLK is again, it's in the green, but it's not significantly in the green, right? We have more of these sectors that are in the green, but you know, nothing significant. You know, there's no sector that's in the green by 1% or more. And we actually have the communication sector that's actually down over 1%. So at this point, even though we have you know, roughly 3 hours left to go in the market, right? So we at 1 o'clock. The market closes at 4 p.m. Eastern Standard Time. I got to keep saying that because you'll be surprised how many folks just don't know when the stock market opens or closes, although the stock market affects us all. But nonetheless, yeah, so 3 hours left to go. And it's pretty, you know, it's pretty safe to say that, you know, I should be, you know, I'll be walking away with a successful position here. So I'll be walking away with $160. But I actually have one other positions as well. But nonetheless, so you can see here, so I have other SPX positions on as well that expire on June the 20th. But nonetheless, I can actually close out all positions today and walk away with roughly around, you know, 300 and some. Well, it's changing here, but you know, close to $300. And I have my other positions on as well. But yeah, so I just want to give you guys an update to show you how the position is progressing. And again, this is what we do. This is what we do at Flip That Option. You know, and oh, by the way, if you haven't subscribed to the channel, please do. And also like the video. And again, if you are looking to trade with a community of like-minded people, the link is below in the bio. You can always join the community. And yeah, and I actually send out trades pretty much every day. And not just SPX trades, you know, trades that that pertain to other underlines, under stocks as well, you know. So yeah, so yeah, I'll conclude here. Hopefully you learned something from this video, particularly with regard to looking at the market internals, you know, $ADD. So $ADD, $VOLD. So this here is the advancing stocks minus the declining stocks. The $VOLD looks at the volume on the New York Stock Exchange. And then the $tick, TICK, looks at the stocks that have ticked 1 cent up or 1 cent down that trade on the New York Stock Exchange. And so those are the market internals that I keep an eye on. And again, it's like looking under the hood of a car. It gives you, you know, it lets you know what's going on in the market and how what's going on with the New York Stock Exchange will impact the SPX or the S&P 500.